Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Today, the markets must cope with two big announcements. First, Donald Trump is the president-elect. And second, according to the USDA WASDE report, the crop sizes and ending stocks simply just keep getting bigger and bigger, and we can see that in the charts. Today we have December corn making another test up against resistance yesterday, only to find the market open and drop very hard post the WASDE report announcement. Right now it's testing support at 343.25, but the market could very well touch a little bit lower given the nature of the strength of the downward movement today. It had been oversold, but the market came back up and is returning back down to touch oversold one more time. And so it remains to be seen where the strength could potentially come in for the corn market. We've previously talked about 329 being a possible price objective, and we can see two standard deviations below the point of control. We have 328 as potential support. So somewhere in the neighborhood of 324 to 328 could very well be a good spot for this market to find some support before turning back up again as we head into the Thanksgiving holiday season. The March contract is much of the same. As we can see, the market had been oversold and it's turning back down. But the key here we can see is that the market has found very good resistance up against this volatility-based resistance area. In fact, the market has now been making consistent lower highs coming into resistance. And so we're looking at a potential breakdown that could very well come in to touch or to test that 343 to 334 area that we've talked about in the past. On this chart, we've taken a retracement from the low up to the high, and we can see here a 62% retracement comes in at 342. And so somewhere in the neighborhood of 342 to 336 could very well be a nice spot for this market to come in to make a low for the harvest and before turning back up. Again, we still continue to believe that the harvest low actually came in late August here, but we're looking for one more low to come in. But depending on the strength of this potential sell-off that we're looking at right now, we could potentially see one more test of this previous low. But again, somewhere in the neighborhood of 336 to 342 is potentially more probable. Our work on the January beans contract showed us that volatility-based resistance continues to be very strong. In fact, after the market came in to touch it, it dropped back down, found support at 986.75, moved back up into volatility-based resistance, as well as one of our sinusoidal support and resistance levels. The market came up into this area and dropped back down again, completely in line with our time factor of November 8th. So we can see the market moved up into that timeline, and today we're seeing a pretty reasonably strong sell-off. If the market closes below this 986.75 mark, then we'd be looking at a target potentially in the neighborhood of 955.5 at a minimum, but in all likelihood, we're looking at potentially 925 for a good target for soybean before turning back up again, given the nature of the WASDE report today. By the looks of it, the move today is shaping up to be more and more significant, given that we've come into an intersection point where we can often see changes in trend when the market makes these intersection points at our natural angles when they cross. So the market now is showing us a big move to the downside. We're simply seeing or simply waiting to see how much follow through we have if this is going to continue. The level that we want to maintain on our radar for the March beans contract is the 1,004.75 number. At this number here, we can see in the past the market found very good resistance. It continued to do so, finally broke through recently, only to break back down below it again, and now the market is currently trading just below that number. Our anticipation is that the market will find strength above and continue to be weaker below. And so given that we're below right now, look for a little bit of weakness, but once the market's able to make its way back above and perhaps maintain it for a few days, that perhaps is a good signal that the market's really ready to turn back up. The wheat contract continues to be resilient. Here we can see the market's been in a range-bound position for quite some time. Yesterday, it looked like it perhaps was looking to make a move to the upside, only to see a big move to the downside today. But the market is actually well off of its lows and currently is trading above the 50% of the day's range. So in essence, it continues to be range-bound in spite of the news that we saw today from the USDA. Given that, we continue to believe that the wheat market wants to continue higher or sideways at the very least going into the month of November and possibly in December at this rate. But this consolidation that we're seeing here continues to resemble accumulation as opposed to distribution. And so we want to be careful here, not necessarily jumping in too quickly, but we believe that here that the wheat market is continuing to point to signs of potential continued strength once it's able to finish and play out of this consolidation. The next important timeline that we have outlined for the wheat market is November 21st. So there is a good possibility that the market can continue to move sideways to slightly up going into this timeline. And from here, which is essentially just a few days shy of Thanksgiving, and so give or take a couple of days, perhaps even after Thanksgiving, is where we would anticipate a potential breakout of this consolidation for a nice strong move, given that the market continues to really be sideways in its congestion for quite some time. It also looks like it wants to continue to trace the trend line here or the time price action here. And so perhaps we'll see a slight movement to the upside as it traces this level, makes it up to the November 21st timeline. And from here, we can see a breakout in either direction. Again, in all likelihood, we think the market is poised to point to the upside. The March wheat contract is moving in the exact same sideways fashion, also well off of the lows for today. But here we have two important timelines, somewhere in the neighborhood of November 17th to November 23rd. So that matches up essentially right up against the same December contract that we're looking at. The December contract obviously will be coming off the table very shortly. And so we want to start to direct our focus to the March contract for continued price action and movement in our analysis. As usual, we will close out with a look at crude oil futures. You can see here the market had quite the violent response when more and more as the numbers and the tallies were coming in, suggesting that Donald Trump could in fact win. The market's initial response was actually to sell off. What we find now is as the news and the media outlets continue to have coverage, they've suggested that given the nature of his acceptance speech, the market was eased by the acceptance speech and believing that things would perhaps move better than whatever they were envisioning. And so the market has since turned back up from there. As time progressed, the market was becoming more and more palatable to the notion of Donald Trump being president. The market has since recovered from there and is well off of those lows, obviously. So apparently it was a knee-jerk reaction, but that's really explains more of the volatility in this huge bar that we see with crude oil futures overnight and through the course of the day. For now, we're very excited to see how well the market has held up against the support that we presented to you before. The market has declined in a very nice fashion here. It's moving up for a few days. We don't believe that the downdraft is quite done as of yet. And so what we could very well be looking at is a move that makes it up to resistance, perhaps close to about 47.60 or so, maybe slightly higher. And once the market makes it up to potential resistance for one more leg down, that we're looking for to test previous lows near the 41.67, possibly as low as 41.96. So we can simply watch the markets here and allow it to guide us and give us direction. But we're seeing very nice, clean, consistent movement with crude oil futures in its movement here as it draws to a close with its December contract. Once again, thank you so much for joining us for our weekly market update. Look forward to touching base with you again next week.